Okay, boys, so here is the solution to the suspense for Driscoll. Okay, let's look at the first working. It says repairs to premises of 3,800 and repairs to private dwelling house of 1920 were paid out of the business bank account and credited to premises. Okay, there's absolutely no problem with paying it out of the bank account because that's where it came from, so we don't need to worry about correcting that or adjusting that. Okay, but however, your repairs should have gone to your repairs account and your private dwelling should have gone to your drawings account, not to your premises account. So what we'll do is we'll open up the premises first of all. Okay. Okay, so we open up the premises. And from that then, okay, because they were credited, we need to debit them to make it square again. Okay. So that was your premises corrected. So where should it have gone? Should have gone into repairs. Okay, repairs and expense. What's the debit entry? 3,800. Okay, and also your drawings is an expense. Okay, so it's obviously debit entry also of 1920. Okay, now we'll open up our general journal over here. Okay, and we have, this is obviously the first working, we have premises. Okay, 3,800, and we have another one underneath at 1920. We also have repairs, which is 3,800 debit entry, and we have drawings, which is a 1,920 entry. Okay, clearly we're going to have a suspense now. Okay, adding up those four figures together, we get 11,440. All right. Okay, where do these go? Well, this is obviously going to be balance sheet, P&L, balance sheet, and your suspense. Okay, let me give you a little, okay, being corrected. Okay, due to incorrect recording of repairs. I'll do just fine. Okay, that's the first working done. Okay, on to the second working. Okay, so we're just going to return the car previously purchased on credit for 57,600 and enter this transaction into relevant accounts incorrectly as 57,760. Okay, however, a credit note subsequently arrived from the supplier showing a transport charge or restocking charge was like 1,200. So the only entry made in respect to this credit note was a credit entry of 56,400 in the creditor's account. Okay, so this is your typical case, lads, of what should have happened and what happened. Okay, so this is what should. Okay, we've done this many, many times, lads. So hopefully you have the hang of it. Okay, the first one I'm going to open up here is purchase returns. You're going to open up creditors. Okay, remember this is what should have happened, so we're doing the correct entries. Okay, so what should have happened was purchase returns was 57,600. So creditors then, you debit that, 57,600. Your credit note then is 1,200 credit entry into creditors and 1,200 debit entry into the purchase returns. Okay, we balance it off. We're going to have a BD balance on the credit side of your purchase returns of 56,400. Okay, and a debit balance, BD, of 56,400 in your creditors. Okay, so let's come down here and say, well, what happened? And see, can we correct it? Okay, so you've got your purchase returns. Get your creditors once again. Okay, so let's fill in what they did. Okay, so they put in 57,760. Okay, and 57,760, and the credit note was a 56,400 credit entry. Okay, so remember, in the purchase returns, we want a BD on the credit side of 56,400. We want a BD of 56,400 on the debit side of your creditors account. Okay, the purchase returns is obviously easy enough. You just take them two away from each other, and you're going to get a credit debit entry of 1360. Okay, We'll put a bubble around that so we know this is the figure that's going to go to our general journal. Okay, over here, we've done this many times now. Okay, so obviously we want a CD balance would have been going over here. Okay, so your CD balance over there would be 56,400. So that means your debit side has to be 56,400 greater than your credit side. So you take 57,760 from 64,400, and then you take that away. Okay, and you will end up getting 55,000. Okay, and 40 euro. And that there is your correct entry. As you can see when you add them together. Okay, it gives you your balance. Alright, so move this over here to your general journal. Okay, and we've got purchase returns. Okay, this is working to 1360. You've got your creditors. Okay, 55,040. Okay, so your suspense, okay, as we know, is 56,400. Okay, another way to get this figure down here, lads, if you like, okay, is obviously 1360 take away from 56,400 will give you 55,040. Okay, now where do these things go? P&L, balance sheet, add suspense, and once again you give your little one-liner down here, so once again being corrected. Okay, due to incorrect recording of purchase returns. Okay, that's your first two workings done, boys. Okay, on to the third one. Okay, so the third one says a credit note received from a creditor from 3440 had been incorrectly entered into the nominal ledger. Okay, which is your purchase returns, as 3224 and entered twice in the incorrect side of the creditor's account. Okay, so what are the two accounts we need to open up here? Okay, so let's open up our creditor's account. And our nominal account, lads, is our purchase returns. Okay. Now, if we look at the creditor's account, it said it had been entered twice on the incorrect side of the creditor's account. That means the 3440 had been entered twice on the incorrect side of the creditor's account. So that means you must enter it twice on the debit side to correct the two entries, and then you must also, okay, correct it by putting it back on the debit side. Okay, so if I was to just take a red pen here, okay, so they did that. Okay, this was their mistake. Okay, they put two entries on the credit side, the incorrect side of the creditor's account. So then this one corrects that one, this one corrects that one, and then that is the correct entry. Okay, so there, these three entries, okay, are the entries that you're going to have to take note of in your general journal. So then on the purchase returns, okay, they put 3224, okay, when it should have been 3440. Okay, so that means we have to put an additional 216, okay, on the credit side of the purchase returns to bring it up to 3440. Okay, because they obviously put in as 3224. All right, so we open up our general journal. Okay, we've got our creditors account. Now we can just say 3440 times 3, okay, to speed up, which gives us 10,320. Okay, and our purchase returns, okay, gives us 216. So that leaves us with suspense again. Take the two of them away from each other, left with 10,104. Okay, and again we've got our balance sheet, our P&L, and our suspense. We give our one-liner, okay, being corrected. Okay, due to incorrect recording of creditors, and here we can say add purchase returns. All right. Okay, on to the fourth. Okay, a debtor who owed O'Driscoll 8,000 sent a cheque for 4,800 and 2,800 cash in full settlement. Okay, this was correctly entered in the books. However, no entry had been made in the books of the subsequent dishonouring of this cheque or of the writing off the remaining debt in full because of bankruptcy. Okay, so if you look at it carefully here, lads, you can see that we were owed, okay, €8,000, but we let it go for 4,800 and 2,800, which means we gave them a discount of 400. Because the cheque is being dishonoured, gentlemen, you're going to be taking that discount back. Okay, well, where is the cheque dishonoured? Okay, well, it's dishonoured in the bank account. Okay, and then we've got our discount that we're going to take back also. Okay, so we've got our bank account, we've got our discount account. Let's look after these two first. Okay, well, that means 4,800 that we thought we had in our bank account is not there, so we must credit it. And the discount allowed was 400, so now we're going to take that back. So 400 goes in on the credit side. It's like this, gentlemen. We had 4,800 put into our bank account, didn't we? Okay, therefore we must take that back out, so that has to be a 4,800 here on the credit side, this figure here. All right, now we would have had discount over here allowed. We allowed 400 discount. Okay, so that was discount and expense. Okay, but now obviously we're going to take away that discount. All right. Okay, so that 400 must go in as your debit or credit side. All right, so that's the story there. We'll take those away just so people aren't getting confused. All right, so that's those two counts taken care of. Now, the next part of this adjustment says we're writing off this debt. Okay, when you write off this debt, you're obviously going to have a bad debt, and you're obviously going to write that off in the debtors also. The bad debt's an expense, gentlemen, so it has to be a debit entry. In this case here, it's 4,800, okay, plus the 400, because you're obviously getting the cheque that dishonoured was 4,800, and the discount you're taking back is the additional 400, so that gives you a bad debt of 5,200. When the cheque was dishonoured and when the discount was taken back, you would have put it back into the debtor's account. Okay, so putting that back into the debtor's account would have been increasing your asset, which would have been 5,200. Okay, but then you wrote that off. So it's 5,200 there as well. So basically, it's writing each other off. Okay. Now you could ask the question: well, is there any need to put in any figures there for debtors? Okay. You would probably lose a mark or two in the general journal, gentlemen, but it wouldn't affect your balance sheet. Okay, or your other. Yeah, just wouldn't affect your balance sheet. That's all. Okay. Now, open up your general journal. Okay, so you would have had bank was 4,800. Okay, your discount 400. Your bad debt, okay, 5,200. And then your debtors, okay, is 5,200 and 5,200. Okay. You can see there then the boys that they all bounce each other off, so therefore you don't have suspense. Okay, the bank will be balance sheet, P&L, P&L, and balance sheet. Okay. Alright, once you're happy with that then, boys, we can put in our being recorded, okay, of this on our check. Okay, I'll squeeze in the last one here. Okay, V. Alright, so looking at V here, it says O'Driscoll sold a private car for cash, okay, to the business for 25,200. Okay, this sale had been treated in error as a credit sale of stock. Okay, so clearly, lads, it wasn't a sale of stock. Okay, so we need to adjust our sales. Okay, and if they put it down as a credit sale of stock, that means then we must adjust our debtors also. Okay, and then O'Driscoll intended that the proceeds of the sale be retained in the business. Okay, so it's capital introduced, right? So, and we also got cash. So here we have sales. Okay, so your sales is 25,200. Okay, on the debit side. Reason why it's on the debit side is if you had a sale, it would have been a credit entry. Now we're reversing that credit entry because we didn't have a sale. So 25,200. Your debtors, if you had it down as a credit sale, you would have had a debit entry of 25,200. So we need to reverse that. So it's got to be a credit entry of 25,200. Okay, we had capital introduced. Okay, and capital introduced is liability. Okay, so it's a credit entry of 25,200. Okay, it was a cash transaction, therefore 25,200 went into your cash account. Okay, that's where the capital introduced went. All right. Okay, it's just like vehicles. If you were given a vehicle, where does it go? It goes into your capital account, but also goes into your vehicles account. Okay, so this is your general journal. All right, so your sales, you have debtors, you have capital, okay, and you have cash. And as you can see, these all balance each other out. So it's 25,200 here, 25,200 here, 25,200 here, and 25,200 here. So therefore there's no suspense. Okay, so you've got sales, it'll be P&L, balance sheet, balance sheet, balance sheet. All right, and then you give your little spiel down here at the bottom. Okay, in this case it's just being recorded. You can give it in there, lads. All right, so there's all your workings done. Okay, so the next thing we're going to do is open up our suspense account. All right, so we've got our debit side here, date, details, date, details. Okay, debit and credit side. So let's go back up here and have a look where our suspense was. I think it was the first few workings. So we have a credit entry here. Okay, to do with premises, 11,440. Okay, we've got a credit entry, 56,400. Okay, and that was to do with creditors. And then we also have another credit entry of 10,104, also to do with creditors. So let's put those in here. So we've got working one, let's do with premises. And that was 11,440. Was working two, let's do with creditors. There was also a credit entry, 56,400. And working three was also to do with creditors. That was to do with 10,104. Adding those, you get 77,944. So this side here will have to be 77,944. So that means your original difference is 77,944. Okay? No, that's original difference. All right. So we can move on to the C part there now, lads, and we can do our corrected net profit. Okay. So come down here. All right. So our original net profit. Original net profit there, lads, is 116,000. Okay, I'd like to do my add first. My add first would be any credit entry in the general journal that affects the P&L. Okay, so you got the P&L, debit entry repairs, no good. Okay, we've got P&L purchase returns, which is a debit entry, no good. P&L purchase returns 216. Okay, so that's going to be our first entry. Then down here, got P&L discount 400. That'll be our second entry. Okay, and P&L, that is a debit entry, so no good. So coming down here then, boys, we can add in was purchase returns, and what was the other one? I can't remember. Discount, wasn't it? Yeah, discount. Okay, so those figures then, purchase returns was 216. The discount was 400. Add those two figures together, you get 616. Add that on there, you get 116616. Okay, so then less all our debit entries that affect our P&L. Okay, so P&L, we've got repairs. Okay, we've got purchase returns. And we have bad debts. Okay, and sales. Okay, there's our 4 entries. So let's put those in. So we had repairs, we had purchase returns, we had bad debts, we had sales. So that's 3,800, 1,360, 5,200, and 25,200. Okay, adding those 4 figures together, you get 35,560. You obviously take that away and you get your new net profit, which is 81,056. Okay, so that's your corrected net profit. All right, now on to the final part of the question, which is your balance sheet. Okay, so your fixed assets. First fixed asset there you have, lads, is premises. Okay, your original premises, lads, is 1,040,000. Okay, but we know any debit entry in the general journal that affects your asset, lads, you add on. Okay, so premises 3,800. Okay, will be adding on, and the premises below it 1920 will be adding on. Okay, and I'm pretty sure that was it. Okay, yes, all right. So we can add on those. So we're adding on 38, we're adding on 1920. Okay, and that gives us 1,045,720. Okay. No depreciation, so 1,045,720. Okay. Next one there in the balance sheet, lads, is furniture and equipment. Okay. And there was no adjustments for furniture and equipment, so it's just 170,000. Okay, 170,000. All right, we can close off our fixed assets. All right, adding those two together, we get 1,215,720. And I'll see the same here as there's no depreciation. Okay, current assets. Same applies as it's in assets. Okay. So if it's in the debit column, we add on. If it's in the credit column, we shall take away. The first current asset there, lads, we have stock, and stock was including suspense. Okay. Okay, and the stock there, lads, was 144,800. Okay, if you remember correctly, we'll just go back up and have a look at it here. Okay, your suspense was, the debit side was down by 77944, which means you have to add it on into stock, which means we must take it away. So we're taking away that 77944. Okay, and that gives us 66,856. Next current asset we have there, lads, is debtors. Okay, there's workings for debtors. All right. The original there from the trial balance was 90,400. Let's go back up to debtors. Nothing in working 1, nothing in working 2. Okay, nothing in working 3. Okay, we have 1 in working 5 and 2 in working 4. Okay, so have a look at them here, boys. 1, 2, and 3. Okay, so come down to your balance sheet. The first one there, lads, is I'm going to add and then take away the 5,200, And then I'm going to take away that 25,200. Alright, and that will give us 65,200. Now, next one there, lads, is cash. Okay, your cash there, lads, is 16,200. Okay, remember we had the introduction and a capital. Okay, so I think it was the last working, wasn't it? Yeah, okay, debit entry 25,200, so we're going to add on. Add those together, we get 41,400. Add those three together, we get 173,456. Okay, so we're on to our next heading then, which is lesser creditors. Okay, falling due within the year. Okay, and the first one we have there, lads, is creditors. Okay, creditors there is 127,400. Okay, and then we need to make our adjustments. So again, now we're on to liabilities. So in the balance sheet, lads, in your liabilities, if it's a debit entry, you take it away. If it's a credit entry, you add on. Okay, so we're looking for creditors. So here we have it. First one there, lads, is a debit entry 55,040. So you'll be taking that away. We also have 10,320 debit entry, so you'll be taking that away. And I believe that is it for creditors. Okay, so taking those both away, which is 55,040, and taking away 10,320, which will give us 62,040 euro. Okay, then we have your bank. Okay, which is 64,000 taken from the balance sheet. We'll go back up here. Okay, nothing there. Nothing in working 2, nothing in working 3. So working 4, we've got 4,800. Okay, so it's a credit entry in the general journal over here. Okay, so we should be adding that on in the balance sheet. Okay, so adding on the 4,800. And that will give us 68,800. Okay, there's no more creditors, lads. Always have a look to make sure, particularly with assets and liabilities. So here then, adding those figures together, we get 130,840. Okay, take that away from your current assets and you get 42,616. Add that on to your fixed assets and you get 1,258,336. And that there, lads, is your working capital. Last heading is your finance by. Okay, finance by then, lads, first one there is your capital. Okay, and the capital there was 1,190,000. If you remember there in the very last working, lads. Okay, we'll go back up to it. Okay, we've got capital introduced there. Okay. Capital introduced, here we go, 25,200. Okay. So we'll add that on. Okay, adding that on, you get 1,215,200. Alright. Now, your net profit. Okay, you go back up to part C, the question. Your correct net profit there is 81,056. Okay, so 81,056. Add those together, you get 1,296,256. Then we have drawings. Okay, it was 36,000. Okay, and then the drawings. Go back up here to your workings. Nothing in working 1, nothing in working 2, nothing in working 3. Okay. Oh, I was pretty sure we had drawing somewhere. Okay, go back to the start. Oh, sorry, there it is, working 1. Okay, so 1920, lads. Alright, so we're going to be adding that on because it is an expense. Okay, so drawings have increased by 1920. So add on 1920, and we have 37,920. Okay, take those away from each other and you get 1,258,336. And that is the same as your working capital, so that's it correct. Alright, gents.